After the US threatened to hammer China with tariffs on a further $200 billion of imports. This has sparked renewed fears of global trade wars. In Tokyo, the Nikkei share average ended 1.2% weaker, while China's benchmark Shanghai Composite Index closed down 1.8% and Hong Kong's Hang Seng Index was down 1.3%. Over in the United States, the S&P 500 extended recent gains to post its highest close since February 1 last night. This is strong results from PepsiCo Inc. boosted optimism about the earnings season. The Dow Jones Industrial Average rose 0.58%. The S&P 500 gained 0.3%, while the tech-heavy Nasdaq Composite Index added a mere 0.04%. Well, it's a sea of red on global markets today. Of course, what we reflected in terms of the United States was last night. This on the back of United States President Donald Trump's threat to impose tariffs on a further $200 billion of Chinese goods. Commodities are down and the local currency has weakened by over 1% against the US dollar. And in company news, the Barclays Africa Group officially changed its name today to Absa Group Limited and is now trading under its new name at the JSE. Let's take a look at the indicators. I'm joined in studio by Devin Shute. He's a portfolio manager at the Robert Group. Thanks very much for joining us, sir.
Thanks, Nampu. Nice to be here.
Yeah, good to have you in studio for the first time.
Yeah.
So it's seemingly all red in terms of global markets, and I suppose a lot of that has to do with Mr. Trump's latest shenanigans.
Yeah, most definitely. I mean, down sharply this morning across the board. Asian markets really opened in the red, and we've continued that, and we expect the US markets to do the same, judging what the futures have done. And yeah, I mean, it was unfortunate. We saw, this continued spat that's really got the global markets very, very nervous at the moment. And the reason they're nervous, although these tariffs are small within the global picture, it sounds a lot, but there's still 2 months to work out finality. The problem is if they really start to take hold, you'll see global inflation start to pick up. Investor sentiment will be dented significantly, and as a result, global trade will slow down, which will impact growth. So I think we're not seeing a full-out war yet, but we're moving closer and closer to it, and as a result, you can see the nerves clearly reflected in asset prices today.
In terms of the tariffs that kicked off last week, I'm hearing in places like China, for example, cars have added prices of about $20,000.
Yeah.
So obviously that means the Chinese, even if they desire that particular vehicle, they won't buy it. And the same, the other side, the US consumer, if things become too expensive, there's not going to be the demand there.
Yeah, correct. So I mean, it's Teslas in China that have gone up proportionally by the tariffs, which have a lot of people disappointed. I think it's a very tight rope that President Trump is walking here, where he's talking about more free trade with China and fair and open practices, which is fine. But when it starts to hit the American pocket, as you were saying, I think he might work through some of that goodwill quite quickly, and people might be getting fed up with what we hope is posturing, but anything can happen at this stage.
It does look as though everything is pretty much down, the global equities, and I see commodities are also not doing so well. What's happened in terms of emerging market currencies? What's the dollar doing?
Yeah, so dollars firmed up in this as we've seen a really strong commodity sell-off. Oil's been included in that, which is quite nice to get a bit of a reprieve, so a bit of a silver lining there at least. But yeah, emerging markets are definitely taking the brunt. This is a full-on risk-off scenario very quickly. We see the escalation happening last night. And yeah, emerging markets did start to get a bit of traction. End of last week, beginning of this week, we then had some worries out of Turkey, and that kind of threw us back again. And this is just not going to help. We're just going to see continued emerging market outflows, which has been the theme of the last couple months at least. And yeah, really poor for our market. You can see the rand, which is probably 9% weaker for the year. Our equity market is down over 4%, whereas you've got emerging markets a lot more stable than us.
The trade war issue tends to sort of overshadow everything else, but in the UK, for example, there seem to be a lot of political problems around the Brexit situation.
Yeah.
How has the resignation of Theresa May's lieutenants, how has that left the situation in the UK, the pound, for example, vis-a-vis the rand?
Yeah, I mean, I think it's as messy as we all thought it was going to be, and we're still not seeing any real benefits coming out of it. They're working through the divorce, and yeah, I think the only takeaway we're looking at the moment is it's going to be long, it's going to be expensive, and yeah, plenty more casualties in terms of politicians. That's
why we shouldn't really divorce, hey? And then, of course, as I mentioned earlier, ABSA decided to rebrand, relaunch. They're now ABSA Group Limited. They were Barclays Africa. There was a lot of confusion for a long time because people would use the names interchangeably. But what difference does that make? Because ultimately the consumer wants good service, and from a shareholder perspective, they want good returns. Yeah,
as an investor, you know, we're fairly underwhelmed by this. You know, it's a lot of marketing niceties, but you know, whether it will translate into any earnings growth, you know, customer-centric activity at branch level remains to be seen. I think there's a couple points worth noting here. One, the ABSA brand is still very strong. In, you know, recent polls, it's the 4th strongest brand in the country, so they're going to use that and roll it out to their Africa branch network. They've got 2 years to do that while it's still branded Barclays. That's going to cost a lot of money, which I don't think is fully factored in. So it's going to be interesting to see, will that name that I think South Africans are comfortable with be adopted in Africa. As an investment case, we like the branch network, but you know, we'll see if there's translation issues there. And then also, just as a group, we're worried about operational inefficiencies and translating into earnings. And you just add another layer of complexity with a rebrand. Everyone's letterheads, email signatures, the works has to change, and it's usually a lot more complex and expensive than people would think. So
they do seem to be working on that. For example, they cut their management structures quite substantially at their retail banking institutions.
Yeah, they're trying, and they do have to kind of make that holding structure much more efficient. They work quite top heavy, so they're doing the right things. They have lost some key talent, we feel, at the real top, so we're watching that closely. We'll give them the benefit of the doubt, you know, let them have their day, and you know, it's something maybe to celebrate, but will it translate into a better investment? Too early to tell.
We'll wait and see. Thanks very much, Devin, for coming in. That was Devin Shute. He's a portfolio manager at the Robert Group. After a short break, I'll have some more business news for you.